Hello and welcome to another episode of Market Watch. And today I have with me Mr. Ravi Abisurya, President of the Stockbrokers Association. Hello, Mr. Abisurya. Thank you so much for joining us today.
Thank you.
Mr. Abisurya, today we wanted to give a view on in terms of the foreign interest in the market and how we see the stock market moving forward from here. So just to start off things with Mr. Abisurya, we've seen about 25 billion rupees coming in from net foreign inflow to the market. Could you tell me why the sudden interest in the market for this at the moment in your...
Yeah, actually the foreigners come in when the fundamentals are attractive. And at the moment, I would say when the foreigners started coming in, more importantly, Sri Lanka was very attractively priced in terms of multiples.
Right.
Now Sri Lanka at that time I think was having a PE of about 13.3 compared to other markets which were about 20 to 18 to 16 in the region. So if you compare, I think if I go to the numbers, Malaysia was about 18.2. Vietnam 16.3, India was 21, and Sri Lanka was very attractively priced. So that made foreigners see our growth sectors that they felt, look, these are very attractively priced, and it was time to come in because foreigners always follow fundamentals.
Right. So what we see is that they were attracted with the pricing, and that was one of the reasons that they thought they should come in at this point because throughout the Sri Lankan market history, we've noticed they've come at a very low PE.
That's right.
And they exit at a very good point. So
Exactly.
where the locals have not been that fortunate to pick up on that.
That's right.
So Mr. Abisurya, going into more detail, comparing the regional markets, how do you benchmark this the foreign interest? I mean, I know if you look at quantums, where it will be different, but where do you see that in terms of the benchmark?
Actually we can easily compare if you take the net foreign inflow, which is basically the inflow less outflow, as a percentage of the market cap.
Okay.
Now Sri Lanka was able to get, as a percentage of market cap, our net foreign inflow was over 1% compared to other markets which were attracting foreign funds, which were less than or around 0.5.
Oh wow, okay.
So that is a huge difference where there was a significant foreign interest on Sri Lanka during this period. So that is, we are talking of the first half of 2017, that is January to June, the full period.
Okay.
So that's quite a significant difference. If I look at some markets now, Malaysia was about 0.5, India was about 0.4, Vietnam was about 0.4, whereas Sri Lanka was about 1%. So that means we, as a percentage of our market cap, we were able to attract much more foreign interest.
Wow. Okay. So that means if you take an absolute figure, then it might be different, but because those the market caps are much higher, but if you compare it to like, so we see a much bigger interest. Okay, Mr. Abhi, that's a very interesting point. And also moving towards the regional markets, as you were talking about, you see, I think Pakistan had a very good move from the MSCI emerging to frontier. So how do you think that has impacted Sri Lanka? Has that had a positive impact? Are we having spillover effects, or is it completely different view that we should take?
Actually, Pakistan moving out of MSCI frontier market to emerging market has a beneficial impact to countries like Sri Lanka, because now earlier Pakistan was a frontier market. Now in the Asian region, in the MSCI frontier market index, there is only 3 countries, that is Vietnam, Bangladesh and Sri Lanka.
Okay.
So there is much more interest when foreign funds look at exposure into the Asian region in the MSCI frontier index. Sri Lanka becomes much more, they get more interested. And the more important thing is, most of the global funds usually replicate these indexes. So when they replicate indexes, so the constituents, that is the counters that comprise in the emerging MSCI frontier market index, gets invested.
Right. Okay. So the foreign inflow comes because the fund managers have to take a positioning, and then therefore they will most probably, or some fund manager might follow the index itself. So there's an inflow. So obviously on a same note, do you think like maybe increasing our market cap or with the SOE being listed, will that also have a more of a attract? Will that attract further more investments coming in? Will that be another catalyst for that?
Yeah, but I will discuss later on the sectors that we had foreign interest. Yeah. But what we lack, if you really look at the sectors that foreign interest came in and the sectors that performed but still foreigners were not active, is the sectors where there was not sufficient liquidity for foreigners to invest.
Right.
Now, foreign investors always look at easy get in and get out.
Right.
So if you are able to get out without a significant impact on the market price, they will be more comfortable to come in.
Right.
So that they always look for counters that have very high free float. Okay. Now, if I go into the sectors there was interest, we could see the industrials and the financials who are the sectors that were performing extremely well, attracted the largest amount of foreign inflows. Whereas consumer staples and I think there's another sector which did not attract, though it performed quite well, did not attract foreign interest. Right. Why? Because the counters in those sectors were not liquid enough for foreigners to come in.
Right.
So we, over time we have seen foreign interest increasing in Sri Lanka. If you take 2012 to 2014, we have seen a significant more, I would say significant percentage of the total turnover driven by foreign investors.
Okay.
So if you take 2014, I think they were about 23%.
Yeah.
Now in 2017 first half, we have seen foreign trading increasing to about 49% of the total turnover, which is a significant change. Of course, that is largely because of lack of local investment.
Right. On the same note, Ms. Avasari, I think rightly said, some of the sectors were very attractive, and we saw the finance sector being one of the key drivers there. And also, do you think the mid caps need to change, or but that wouldn't be in terms of the appetite of the foreign investors purely on that liquidity factor? I believe, is that what we could assume?
Yeah, of course, the performance has to be also very good.
Yeah.
But while you have very good performance, now the sector I forgot to talk about is the material sector.
Right.
Which also has performed in the first half of 2017, return of about 19.2. Still, we didn't see foreign interest in the counters in that sector. Whereas the sectors like industrials at a 27.6% return, financials about 17%, and consumer staples about 18%. So these sectors had attracted a lot more foreign interest.
Right. So I suppose the foreigners should be looking at the material sector as well.
But forward. Maybe not enough liquidity.
Exactly.
In the counters.
Yeah. So Ms. Avasari, moving on to more local domestic participation, what is the local sentiment at the moment from where you sit at the moment?
It's a bit unfortunate because local investors were not really investing based on fundamentals. They were listening to basically stories.
Right.
And they are very short term, I would say more punters rather than investors. So when you follow stories and invest in the market, you tend to burn your money. You basically lose when the markets go up as well as down, because markets are volatile. And you cannot basically invest long term and build a nest egg based on stories. You have to be investing with fundamentals. So that's the right way of investing.
Yes.
So our local investors unfortunately are driven by sentiment, and they are also listening to a lot of noise that is basically coming from the political rhetoric that keeps on happening, and they also take a wait and see attitude rather than pick the fundamentally strong stocks and have the emotional strength to stay with those stocks, though they may even go down.
Yeah.
Because the fundamentals are so good, they will turn. You know, if you invest in John Keys at 134 rupees, now it's 165, and you have benefited. So
yeah.
When the stocks are on sale or really valued, foreigners come in, they pick those and wait.
Yeah.
Our local investors, unfortunately, doesn't have that capacity to, or used to not have the capacity to pick those fundamentally strong stocks when they are on sale or when they are really valued or worthwhile getting into.
Yeah.
They get into usually when the market is kind of right at the peak or in a bull market, where it will go a little bit more up and then start becoming a bear market. So
yeah.
they make money, but not so much as those who have come in based on fundamentals
yeah.
and invested long term and wait for their time to come.
Right. So again, Mr. Abhisuri, I think what the message we are trying to give out to our investors again is, the market is not a short-term investment. You have to take a more of a longer-term view,
Exactly.
I believe. And also, I think the past has, rightly said, a bit spoiled the investor sentiment, where they expect these shorter-term returns. But I think, like you said, if we invest with a more long-term aspect with good earnings and good fundamentals, I think definitely they are going to give you dividends in terms of return, I believe, as well. So yes, Mr. Abhisuri, thank you so much for joining us today. I hope the viewers out there had a good understanding of how we should be going forward with the more fundamentals. So thank you very much for joining us, and I hope you see you next week. Have a good day.